Welcome to Trading Lounge and the Australian report, and starting on the daily chart here. On an intraday basis, the ASX can follow the S&P 500, and it's always good to have that open if you're intraday trading. But in the slightly bigger picture, this market can be trending down as such here, while the US markets are trending to the upside. So it can really also do what it needs to do in an individual way as well. So we have to be sort of mindful that, we're not like a dog on a lead following the US markets all the time. We are, in the sense that from 2016 here, the S&P or the US banks pushed up first, and I recognise that, and then everything else sort of fitted into that, the DAX and so on. Our banks never really rallied until very sort of late. The European banks were sort of in the middle, so they're all sort of doing different things. And this particular count here, in the sort of bigger picture, follows the US count in terms of wave 1 and wave 2 here, wave 3 here, wave 4, and then wave 5 to the upside. Now, this particular wave 4 here, I've got this here, just open this up a little bit. I've got it like this here as an A wave and a B wave and a C wave, and I think that's correct. However, it's also possible that wave 4 could also go into here as well. This particular wave 4 in the US hasn't actually started yet. So the time it does start, we may end up in this C wave here. Now, the other thing here is that if this wave 4 was here as such, then if we got a really nice tested support on 5,800 here, well, then we'll just naturally go long from that point, okay? And we would look at it like that. But this move up here so far is actually in 3 waves here. Now, the banks like CBA are displaying a possibility of actually having 5 waves up, and we know that this index also follows the CBA, the banks. So let's just see how this particular leg here finishes off for the day. I mean, even if we got 5 waves up in 1 and 2 and 3 and 4 and 5 up here, then we'd still have to wait for an A and a B and a C to come back anyway, to catch the next trend up. So I'm mindful of that, and we won't miss that. The other point here is that if this is the B wave here, then the C wave here will be looking for 5 waves down here from like this one here is 5 waves down here. So we need to be looking at the short side as well. So we need a strategy to be long, and we also need a strategy to be short. And I think that that's really quite simple. And the beauty of that is we're working with this particular number here, the 5.8. So as support, we'll be looking for the long side. And on the negative side, we'll be looking for the short side here. Yeah, there is a possibility too that also with the banks, and it's quite prominent on when you look at WBC for Westpac, for instance, that this particular A wave down here could actually be wave 1 and wave 2 here, and then wave 3 down here as such here. And then the way that would play out, if I can just go to the weekly chart here and put that here as well, this is how it would play out here. We know that in the 209 lows in the S&P 500 and so on, that this is a cycle wave 4 here, and this is primary wave 1 and 2 and 3. So it's possible to have a wave 4 like this here as well. So this being wave 3 here, an A wave here, a B wave up here in 3 waves, because that's only in 3 waves so far, and it hasn't taken out the top. I mean, if it had taken out the top here, then I know it would have been a B wave or an expanded flat or wave 3 or something, but it hasn't. So I still need to leave it in that 3 wave structure here as such, and then 5 waves up here. So it can be a B wave, and if that's the case, then we could get 5 waves down here. We've already got wave 1 down, which we're calling wave A at the moment, and we're looking for this B wave going up here. So that's why the short would be important on this side. So we have to be open to that, or we have to be rather open and flexible to that, and have a strategy for that. It's not about being right or wrong. It's a matter of being on the right side at the right time. There are cases where we know what the Elliott wave structure is and it can't be anything else, and then we can move with that. But other times there can be options that are just as viable, and to be open to those is just a necessary part. It's a mature part of using the Elliott wave structure. In hindsight, it's easier, and sure, there's a lot of good things in hindsight as well. I know people bag hindsight, but there's a lot of learning objectives in there as well. So yeah, so just coming with all that in mind, if we just come into, say, the 4-hour chart here, and I'll open this up here. So there are possibilities. So in a bit of a nutshell, we can look at, we can see that the market has moved up and moved back here. So we've got this pattern at the 5/8 here. And we, at this stage here, we can look at this as being, well, we can look at all of this being 1 and 2 here, then 1 and 2 and 3 and 4 and 5 here, and for 3, and then back up for 4 and down for 5. I mean, that all fits quite nicely here. I could have that as an ABC correction as well. I know that, and that would just basically have this wave 4 out of the way here, and this wave 4 would be here as an A wave, and a B wave here, and a C wave here. But this is always in more of a 3-wave structure, so I was never quite happy of putting that there. But I need to be, I just need to be sort of open and include all the counts. So I've got this as wave A here, wave B up here that pulled up to the 61.8% mark, and then on the cash market, this move down here is in 5 waves, and in this market here, we can count it as 5 or 3. So I'm just going to be a bit mindful of that. So there's a lot of little counts in here. That's why I just really want to simplify it the best I can. And now we have a high, and now we have a low, and we have this level here. So in one way or another, the market's going to sort of settle in here. This little move up through here is corrective here. So I wonder if we're going to get an A wave here, a B wave here, and a C wave back up here and then down, or will we find support on there? So I know that we can move this line here now up under this little guy here. So on the hourly chart here, we'll just keep sort of moving in a little bit. So yes, as I mentioned, this move up from the low here to the 61.8% mark or above it counts quite nicely as a 3-wave structure, and especially because there's 2 reasons. Is that, first of all, if it had 5 waves to the 61.8%, then I would be bullish from that point. But it's only got 3 here. On the cash market and on CBA, especially CBA, it does appear that we've got sort of 5 waves up here. So CBA, it's only got 3 waves up so far, but CBA never pulled this far back down. It only pulled back down to the 4th wave of 1 lesser degree. So I think CBA can make a new high. It doesn't mean that this market will make a new high, but what it does mean is it does mean that from this point here, that it could move back up to this point before moving back down here again. Okay, so that's what I think. This little move here appears to be corrective, so that's why we need to be mindful here. So I think we talked about this low here being a possible short area here, and yeah, it wasn't quite sort of breached here, but if it was or wasn't, but still we need to put this under here now. And we can't place this one here yet. Technically, we need to leave this one up here. When we get our second high here, then we can bring it down. So this basically is at this stage here, we just need to see if it's going to basically vibrate across this 5/8 here, giving us, better, more refined entries for being short or being long here. I think that we just need to be open for both of them in this case here. On the 15-minute chart here, as I'm on the tick chart, like on the cash market, this appears to be 5 waves down, but on CBA, it's not quite like that. So I've got to be a little bit careful. If they were both telling the same story, CBA and the cash market, then not a problem. But they've both got different ones at this stage. So Yeah, so let's just see how this goes. So in this case here, if this 5750 here becomes the retested resistance or breach clearly, well then we can look to short from that point there. On the tick chart here, I've just written that in there. The cash count has 5 waves down here because I could count that this. I counted all these little waves here, and it counts quite nicely as an A and a B and a C wave here. But also too, this is really quite obvious here that I've got a 5 little wave structure up to here, then a reversal, and then the other 5 up to here. So I've got 3 waves up to here. I could also count this here as well as an A wave here, then an A here and a B here and a C here, but I think it counts better like this, so I'm going to leave it like that. And then there's a clear 5 wave structure up here. Whichever way I look at this here, it's telling me that it's a corrective move. So it's telling me that this move up here is corrective. So this move down here can count as 5 waves. That's why we need to be looking at taking this low out. You could bring that up into here a bit closer. So instead of the 50 that we've been working on, you can use the 60 here as a retested resistance now. Okay, so it's possible that we could get this ABC could get a little bit larger here. So we could look at it like this here as well. And if that's the case, then this little move up here would need to count as 5 waves. So a little 1 and 2 and the third wave in here. So this is the 50-60% retracement level here. So if it fails from this little box here and pulls back down here, then you'll know that this is bearish, and then we would need to look at this here as wave 1 to the downside here. So if that fails in here, we've got a weak day today, because Friday wasn't a strong day for us, was it? If it had closed really strong, then we would expect Monday to be bullish as well, but it wasn't the case. So we need to be mindful that this here can be counted as wave 1, ABC for wave 2, down for 1, back for 2, down for 3, 4, 5, I'm working lower from here. So we could also just put this here as a possible wave 1 here as well. So we just really need to be open. So it's really not about, we know that there's too many options for Elliott at the moment, so we just need setup. So I think the main thing that's going to happen today, if we have a bearish day, it will be that 5760 breach as a retested resistance for the short. Okay, if the market's going to push up today, we still need to see wave C here being much the same length as wave A here, coming up into that space there, and it could still fail from there. So even if it comes up to here, then if I can draw or just draw here. So if the market comes up here, then it's going to have 5 waves up here, and then it's going to pull back. So it's either going to pull back from that point and then here, and then basically work lower from there, basically straight down. I can't draw on that side. Or we got that high reference point there where we can have our entry point there, and we can pick that up on the way back here. Do you know what I mean? Because we'd have 5 up there, 3 back, and then we'll be pushing up that way again. So we're getting quite close to a nice setup here. We just need to be a little bit patient. It does appear that the S&P can move a little bit higher as well once the market's opened. So I think that it's also got the S&P 500 has got enough legs to take this up here to do that, and finish this, and also to finish the CBA one off as well here as well. Because if I can bring CBA across here, and we were looking at this being wave 4 yesterday on the Friday here, and it hadn't really moved along at all at that particular point. We could also put this here as well. And if CBA is going to push up, it would be 1 and 2 and 3 and 4 and 5 up to here, finishing that new high off here. If I can just bring this in here, this was the count that we've been looking for CBA. So CBA never pulled back down like the ASX 200 did, and we could also count this as 1 and 2 and 1 and 2 and 1 and 2 and then the third wave here, and the fourth and the fifth, and so on here. So it counts quite nicely to make a new high here. So just because this can make it can make a new high here, and if it does, well then obviously the ASX 200 will move higher as well, but it will reach its high here and then have a pullback from that point. So yeah, all right. I think we're not going to see any strength from the metals. We might see a little bit of short-term strength from crude oil, but crude oil is still in a downtrend, so I wouldn't be sort of looking at that supporting the market at all. So it'll really be the banks and the and this market that are going to play out here. So yeah, this little pattern here at this stage here is quite clear that this is a corrective pattern within here. So just be careful about going long if you see the market bullish, you know, coming up into 858 or 5810 would be the target area for there. But we're not going to go long there. We're going to wait for that top to come in play, and then we're going to you know, move that because that would have been the entry here. Now we're looking for the second high above the level here for the next better entry, because if it does move, we'll be on the right side at the right time, and it'll all be good. Alrighty, cheers.